Hello and welcome to this very special interview. Joining me today is one of India's sharpest personal finance minds, Feroze Azeez, who's the Deputy CEO at Anand Rathi Wealth Management. Someone you've been following, all of you, for a very long time. And it's wonderful, Feroze, to have you here on the Money Mile. Lots of questions to ask you in these difficult times, but let's get first straight up to Feroze. Volatility seems to be the new normal. I mean, we've seen extremely sharp, volatility in the market when we hit COVID-19, and we continue to see it's not as severe as it was perhaps a few months ago, but it's still there. And do you see that as being something we all have to live with? And how should an investor deal with volatility according to you?
See, I think, Vivek Sahab, what's very important to see is at every point in time there'll be volatility. People use this nomenclature as sometimes an intimidating tactic or actually a concern from an investor standpoint. When you think of volatility, volatility has numbers. So if I look at numerical values of volatility before the pandemic and after the pandemic, before the pandemic, the 3-year volatility of Nifty was 13%. After the pandemic has happened, so if I put a date to it, 29 February, before this whole thing started, the volatility which Nifty exhibited for 3 years before 29th February this year was 13%. Now, if you measure the same 3-year volatility for June 30th, which is the last month's closure, you would see a volatility of 17%. So what is the 3-year volatility spike you're seeing from 13 to 17? That's the 3-year volatility. In this period, there's another volatility number which might intrigue you, which is the 1-month volatility number, which the derivative segment throws up, which is called the implied volatility. Implied volatility. That in the month of March had touched a peak of 85, 86. Today it is at 24. So what does this state? This states that the fear levels which were there in March were significantly more, right? More so, as much that I have in my working career of 17 years, in even 2008 crisis, had seen an implied volatility of 1 month to not more than 58, 59. So we surpassed the last fear levels by a handsome margin, but now we are back to 23, 24. Normally 1 month volatility should be in the range of 18 to 20%. So we are as close to normal as it could get. I think fear levels have come down significantly. I think that gives an expression, that's an expression of market participants' confidence on the levels which they are trading on.
Been a pleasure talking to you, Feroze. Thank you very much and wish you all the very best. These are difficult times. You're doing a lot of good, hard work, advising and hand-holding your customers. So wish you all the very best. Thank you very much for joining me.
Thank you, Rathi.